Are we in the biggest bubble in U.S. stocks that we have seen within our lifetime? All right, everybody. Happy Monday. It is November 24th. It is Thanksgiving week. Just a couple of quick announcements here for everybody. Tomorrow, we are going to be recording our next podcast episode where we're going to be talking about, are we in the biggest bubble in U.S. stocks that we have seen within our lifetime? We're going to be contemplating that question, presenting evidence for, maybe against. If there is a bubble, it's probably in the AI space, in the private credit and private lending space, particularly that is lending into the AI build out, the data center build out. Today, I want to talk about a couple of areas that may represent the epicenter of that risk and what that presents overall to the market. So now, as I get into this, we're going to talk about a couple of individual securities here. This isn't about making a recommendation to buy or sell anything, certainly not about the individual names that I'm going to mention. But here's what I want to touch on. So Oracle was one of the stocks that there was a big deal announced back in September. We talked about it in our September monthly market review, where NVIDIA was investing money into OpenAI. OpenAI was going to sign a deal with Oracle for cloud computing services, and Oracle was going to buy semiconductors from NVIDIA. Well, on that news, NVIDIA stock had the best day that it had in 32 years. It was up 30-some% in a day. It had closed the prior day at around $240. It traded as high as $345 the next day. But all of that gain has now subsided in less than 2 months. And so the question is being asked, well, why? Because this was a big deal that they were signing with OpenAI. Now, OpenAI is the company behind ChatGPT, and that company, even though it's very new, it is quite large. They did around $10 billion in revenue their first year in business. Now, the problem is they have signed on for about $1 trillion worth of commitments. So much so, and they are so leveraged that the CFO of OpenAI, as of early November, was saying that they believe that they're going to need U.S. government guarantees in order for them to continue and finalize the infrastructure that they're going to need of more than $1 trillion. That is unbelievable that this company is now saying we need the government to step in and back all of the lending that's going to happen for us to build out what we need. At the same time, we have a company like Oracle, who, as a result of this deal with OpenAI and others, they are now going to have to borrow substantial amounts of money in order to make these deals happen the way that they're supposed to. The deliverable that they're supposed to have to OpenAI is that they're supposed to have these data centers up and running by 2027. They need tremendous amounts of power in order to make that happen. This isn't part of this conversation right now. We're probably going to talk about it in the podcast. But that deal that was supposed to be worth $300 billion to Oracle is now worth an estimated minus $74 billion. The credit markets, the credit default swaps, which is a scary word that a lot of us remember hearing about from back during the financial crisis. This is a way that fixed income investors can buy insurance against the potential default of an issuer. the credit default swaps for Oracle over the last several weeks has just gone vertical. And so between Oracle, their credit default swaps getting a very strong bid where the market is concerned about the viability and the ability for Oracle to be able to pay the bonds that they are issuing today, or the private credit that has emerged as a result of a lot of this build out. And a lot of that is being done by a company called Blue Owl, one of the players in the space. Now, Blue Owl is a publicly traded company, but the private lending that it's done is all is not publicly traded. It's not traded on an exchange. They're alternative investments that are more illiquid, and the covenants around the way that a lot of those structures work are quite complex. Those securities are not regularly marked to market like an ordinary bond offering would be. And so I would venture to say that looking at the stock of Blue Owl may be one of the better ways to get some insight on what is the health of this underlying space. And this stock is down close to 50% from its high earlier this year. In the last 10 months, it has gone from almost $27 a share down to 14. So it's almost been cut in half. This is definitely not an uptrend. And I would venture to say that as long as it is below some of this prior support, right in the let's just call it about the $16 range, somewhere in there. As long as we're below that, then the risk here is to the downside. And so these are the epicenters, I believe, of risk in this space. And here's the question that I have. A lot of the advance that we've seen in the stock market, a lot of the economic activity that we've seen this year has been directed into the AI space. A lot of the investment, the capital expenditures that are happening there, that has been driving the economy. And so the bottom 50% of the U.S. economy has really been struggling. We've seen that when we looked at things like restaurants and other things that are close to the more marginal U.S. consumer. We talked about that in our October review. If you didn't take a peek at that yet, go ahead and find that. But my question is just this. What if companies like Oracle, what if they have to renege on the build outs that they've promised to do for a company like OpenAI and others? And Oracle wouldn't be the only one. But there are, as we saw with the statement that Sarah Fryer, the CFO of OpenAI, said, they have $1 trillion worth of commitments out there to build this infrastructure. That is an insane amount of leverage for a newer company that just did $10 billion in revenue in their first year. A massive amount of leverage. What if they can't actually do the build out that they want to do? If it has to get scaled down, then there is the potential that these stocks could come down maybe by a substantial amount. And so I think that represents the risk in the market today. So we're going to talk more about it in our podcast that we're going to record tomorrow and will be coming out in the following weeks. That are we potentially in one of the largest bubbles that we have ever seen? And if we are, what do investors need to be doing right now to be able to protect themselves on the way through it?